Hey everybody, it's Fridays. You know what that means? TWIRE. This week in real estate. A lot of stuff happening this week in real estate, so let's get right to it. All right, first up, a lot of people in this area count on the USDA. Yes, those are the same people that grade your beef. They also make home loans. And what makes a USDA loan so attractive is that it's 100% financing. It's no money down. It's available for all of Sevier County, most of Blount County, some of Knox County. And it's meant for more rural areas. So, in the city, generally, it's not available except in Sevier County. Everywhere in Sevier County, you're good. Okay. So the good part is, these loans, they've just increased the total household income to $82,700. That's for, family of two. That's the maximum income now. So it's been raised. So if you've got two people earning income, now, that income adds together and more people can now qualify for a USDA loan and buy a home 100% no money down. Now, the other thing it requires, you need a 620 credit score to qualify for that. So you do need a little bit stronger credit score. A FHA loan only requires a 580 as a minimum. So, better credit score, better deal you can get out there. All right, so the other big news in real estate this week is the federal interest rates. Now, they've ticked up a quarter point. Now, why is this happening? Well, the economy is finally getting out of bed and finally getting back to work. So you have almost record unemployment now. I shouldn't put it that way. You have record employment or record low unemployment rate. And, now it starts getting to a point that, the feds start worrying a little bit about inflation. And how do they do that? They increase the interest rates a little bit to put a little bit of damper onto the economy. Now, a lot of people hear that news and they think, oh no, interest rates on my mortgage are going to skyrocket. Not true, because all the people that, the bigger wheels that determine the interest rates in mortgages, that interest rate increase from the feds, they pretty much already factored that in there. So they knew that was coming down the pike. Now, the feds have signaled that there's going to be one or probably two more increases later this year. They're probably going to be small. So, expect interest rates on your home mortgage through the year to creep up. It's not going to be anything drastic. So you don't feel like you're going to miss the boat. But if you are thinking of buying a home, now is the time to do that this summer before interest rates get higher, because they've got no place to go but to up. But basically, in the grand scheme of things, you should, look at interest rates right now as being at, pretty historic normal levels. This is pretty much where interest rates are historically. Now, you could also say back in the 80s, interest rates were like in the double digits, and yes, they were. Now, we're not going to go there anytime soon. But I think interest rates in the 4, 5, maybe even into the 6s in a few years, that's going to be what we're looking at. Now, because the economy has been increasing and improving, if you have an adjustable rate loan, those mortgages are slowly moving up too. So yours truly here has an adjustable rate mortgage, and my payment for this year is going to go up a whopping $50. So am I glad to pay $50? Yes. You know why? Because I'm into the 15th year of this mortgage, and I've beat the prevailing low rate at the time we took this mortgage out. And so now I'm just being even with the market. So I've enjoyed, a good 12-year run of paying less than everybody else. So I feel really good about that. I know a lot of adjustable rate mortgages have a bad reputation, but it's all in the terms. Where does that interest rate initially start? How long does it stay there? How often does it reset? How much it can change by each time? And what's the maximum cap of that change? And so once you know all those things and you factor in all the differences, yes, our interest rate and our mortgage did go up a full point, and the payment went up $50. All right, can I absorb $50 out of the household budget after 12 or 14 years of inflation? Yeah, you betcha. So overall, a good move. And who knows, that rate could trickle down next year, and I'll be paying $25 less. It has gone up and it has gone down over that life of the loan. So adjustable rate mortgages, they are still available. A lot of people are scared about them. Don't be. Just look at the terms. make sure you understand the terms, and then go from there. All right, so that's going to wrap it up for this week in real estate. Hope you enjoyed the episode. Leave your comments below, share it on out. And if you're watching on YouTube, be sure you hit the subscribe button, and then that way you'll be notified every time a new episode gets loaded up. If you've got a question, put it in the comments below, and I'll answer it in a future episode. All right, guys, have a great weekend. Hey, it's Father's Day weekend. I almost forgot to tell you what's going on. Big Kahuna Wing Festival in Knoxville. Really good event. Chicken wings and beer. Doesn't get any better than that. And in the Pigeon Forge Sevierville area, Balloon Fest. So if you like hot air balloons, that's the place. So chicken wings and beer, and then head over for the Balloon Fest. That's a great Father's Day weekend. All right, guys, till next week, be nice to each other, love your neighbor, and have a great weekend.